Good afternoon, lovely people. Yes, it's the Market Sniper coming at you on the energy markets. That's right. What are we going to talk about today? Well, let's tell you what you're going to hear so that you know if you want to hear it. We're going to talk about oil, but it's not just about oil. Many of you will think, I kind of don't care about the oil market. No, 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 no. Actually, it's going to involve the everything money market. In other words, have bond topped? Is debt about to turn? Are interest rates actually the next major series of moves going to be up? Are we going to be forced to try protect a runaway inflationary environment? Commodities are a bull right now for me on all levels. They are a bull. That doesn't mean they're the biggest and best bull. You got the likes of the ultra bull that is Bitcoin. We can refer to this morning's chat later, but that we want to handle the commodities markets today. So what am I going to tell you? So why oil is actually going to trade 3 digits again. So at the better part of $67, we said we're going to see single digits. It actually, on the WTI, that is, Western Texas Intermediate, it actually plummeted on futures, actually recording negative value due to storage costs. We're going to have a look at Brent, which is its sister, which is actually more used and is going to be, in some senses, a smarter, better chart example. Then I'm going to show you structures that are occurring technically that give away the whole story. This is not purely about oil. This is about a commodity macro bull due to the lack of sound money. So we will look at silver as a byproduct of another commodity in the space. We will also take a look at the debt markets, which I think are the great problem. If everything's going up, what's going down? Well, the value of the dollar, we'll look at the dollar index and the value of the dollar. What about those debt markets? Do you really want to sit with a negative yield in many instances to inflation, and in Europe a negative real nominal yield? So you're being paid to lend money to somebody. Are you really going to sit with that? There's the amount of negative real rates and nominal rates in Europe is obscene when you allow for inflation on spoilt inflation stats. So what's going on? Why? What is the larger story behind oil in this call going back above $100? Why am I saying that? I mean, are you traveling more? No, you're not. Are you flying more? No, you're probably not. Are you driving more? No, you're not. Are your new cars burning more petrol or less? Well, more people are buying hybrids and EV cars, Tesla, etc., batteries to the moon. No. So why would the oil price go up? Well, there's a couple of reasons for that. So good. We really appreciate you giving us a share so that we can entertain you and also bring you to the market in terms of our best and biggest thoughts. And there's 126 of you watching right now. We can get that to 1,000 if each one of you give us a share. We also see 33 of you have liked. We really appreciate that. That's about 25%. Thank you. This is a no ads channel. We do not get given on your notifications. Even if you've hit all, you have to go click and check you're still getting all notifications. It's no longer in Google's interest to put forward channels that don't advertise. They want to make money. So they're going to keep shoving to the top of the list the ones that run ads. Keep making sure you're always notified. By the way, also in the links, free mini series and an opportunity to book a call talking about our traditional markets. Let's go to the chart right up there. Boom. Starting off with Western Texas Intermediate. Now, the key thing I've done here is the footprints of the money should belie the opportunity. Now, the extremity of the move to the downside does then later project a recoiling, commiserate move to the upside. Now, initially, I wasn't super excited about oil on the bull side. I said, let it get back into what you're seeing here, which is a falling wedge. This is WTI. This is Western Texas. In fact, most of the European, UK, and Indian, etc. markets is using Brent. We'll be looking at Brent as well. You get different heaviness of sulfur and tar elements in oil. So you get light sweet, which is much less strenuous. to refine. So the greater the refinement, the higher the cost, the cheaper the oil. If it's dirty tar, it needs a lot more filtering and work. But as you can see, it's kept caught up with Brent. Brent's around $61. We'll have a look at it. You're at 58.48 on Western Texas Intermediate. That premium did broaden immensely because you also had capacity refining issues. And what's actually happened is with COVID-19, a lot of the big oil companies didn't dip as far as oil and haven't rallied as far yet. The commodity has been the more volatile. So in essence, people have seen this as an outlier and a bit of a ridiculous event that will stabilize. In other words, they were already forward guessing the rally that has occurred, the smart minds. But what's been more interesting that I've been observing and watching for a while here is this point. After that dip back, which was not particularly bullish, how strong we have been now. And the key element is we are getting to what we refer to as a capping descending grind line, which is one subcomponent of the falling wedge. And you will see that, well, you might say, well, your wedge is a little bit flawed because you have a stab through. We actually have theory that allows for that, but you do have bodies stab through as well. And I'll be showing you why Brent actually is the more useful and the more interesting chart in terms of the perfection of the structure. But you might choose to trade crude, Texas, Western Intermediate, or you may choose to trade the Brent. We'll be coming to the Brent chart at a moment. But there's a key event occurring. It may already have that kind of momentum. We're on, by the way, time frame. Have a look up top here with me. Going into there, you can see we've selected the monthly. So one of the key things that we did that was kind of naughty with a Bitcoin call was a very short time frame trade. It was 5-10 minute patterns after a long extension to the upside. This has far more certainty, and this is where our best and greatest trade calls are. They are big time frame trade calls. This is a super macro falling wedge where you had an absolute capitulation out the low. And no, everybody is not suddenly going to be running on batteries. 747s and Air Maxes aren't going to be falling out the sky on battery power either. They're still going to be running on jet fuel. And that doesn't change that quickly. And what's actually happened is the number of offshore drills have dropped to virtually all-time lows because of this contraction in demand. We have passed, in my world opinion, peak demand. We have passed, in my world opinion, peak demand. But that doesn't mean you've passed a peak price and you can't go high again. That doesn't mean you're going to make an all-time high, but I see triple digits coming and potentially an all-time high if we continue our lack of sound money behavior. What's the key thing about this industry? It's still really, really needed. But how many new people really want to go into an industry that's viewed as long-term dying? Not many. So what ends up happening is all the bright, shiny new things and the bright, shiny new degreed people go into battery and Tesla and the new realm and actually have to pay more for people that keep the lights going in the old industry because it's an open secret. The control structure will want to fold it down. I don't think it'll ever go completely to zero, but it's going to be tapered down. Everything in government is now about green. Well, to a large part of that green dynamic, a large part of that is taxation and controlling you. It's not really green. The Rockefellers ran Exxon and many other the parts, the original parts of Standard Oil, and they destroyed South America. They pumped all sorts of chemicals into the Amazon River. They didn't care about local communities. These are now the new reformed people. And let me just say the green agenda. You take out Biden's commitment to get all government vehicles on batteries. And by the way, just because he said it doesn't mean it's instantaneously happened and every vehicle is now scrapped and there's an order already on Tesla's books for its replacement. No, it takes a while before that happens. And even with that commitment that he's made, it'll take a while before it starts coming through. So what do? What's going to keep happening? Well, there's still latent demand for oil. It's just been tarnished as a very uncool area. That pushes up price. And when you then have such a closure of offshore drilling because the price was completely non-economic, it was a loss making, what's ended up happening is you had a very abrupt, rude awakening. Demand is here, never, I think, to hit its all-time highs. But if you have oversupply, which caused a glut, you got a very rude reset on the supply dynamic to the point of shortfall that the glut slowly gets worn away until you start finding balance again. And if that glut gets worn away and you're still undersupplying, what actually starts to happen is price goes up as long as there's undersupply until they're back in balance. And we're seeing this technically in the chart. So I've created a narrative. I'm trying to show you visually in terms of the economic theory of supply and demand, and also why uncool industries that have to be continued need actually to make more money and cash cow because they've got a limited time frame. No one wants to do new investment in that space. That is a perfect setup for a breakout out of this falling wedge. So where is that 100 level? Well, let's just remind you of where it is on the chart. Let's refer back. So we're known for two big bear calls on the oil market. This was a huge one that surpassed even our own expectations. And this was also equally pretty vast and extreme. And we thought, we don't know how or why, but it just looks that way. And it ended up happening. Plus, of course, the glut factor, the futures, the storage, that was a problem that caused the overlay. So the minute demand and it gets a violent reaction, you get an extreme movement in price. So what's actually happening here is we are coming to, without many people talking about it in mainstream media at all, which is why you watch this channel, not mainstream media lackey-dom for followers. You want to be early, you want to be wise, and you want to be smart. You're coming up to a key point where a break might occur. Now, in our falling wedge theory, and you can learn a lot more about it if you book a call and you join our community, but I'll give you this one completely for free. We like to see, let's do fat pen. Fat pen wins. Fat spelt P-H-A-T. Fat pen. We like to see a really violent and sharp, what we call Swiss chalet roof spike, and then we like to see a bloated second impulse coming over, up and over and down, and that was your second. And often we get inverted HVF structures, which was part and parcel to our original call way back here, which was in 14. How many of you were actually following me in 2014? I think we had far less subscribers then. I'd love to have more. Thank you for sharing, by the way. How were you following during this time? How many can actually say, I followed you, I remember when you said it and it happened? I don't think too many, actually. I hope some of you are here, because otherwise, if the tree fell over in the forest and no one saw it, did it really happen? I don't know. You'll have to check the old YouTubes to make sure. Then there's the third lesser impulse, but still highly significant, that also had our squeezy Japanesey and the dump. So those are your child's drawing. 1, 2, 3, 3 impulses in the falling wedge. Wait for the break. This wasn't such an extremity. We did what we call type 2, and that means you get a spill through the supporting basing descending grind line, this line over here. So you dip to the downside, and then it caused such an extremity. There was a violent adjustment in the supply, and now you're snapping back. It's kind of like you jumped off the bridge with your bungee cord, and the higher you jump, the harder you're coming back on the rebound. So that's a little bit about what's going on. And this event is coming here, and actually we're accelerating. These monthly charts on oil have been pretty spectacular. So let's wipe the face and start again and show you how it looks. Look at those last 4 candles on a monthly level in terms of progress. Whoops, let's choose the square, shall we? Let's go back to our favorite color. So in essence, you've gone from around $32.5, $33 trading 58.47. Now, this is not a crypto market, and everyone's so drugged up on huge, unbelievable percentages in the alt market, in the cryptos. But let me just tell you, in the normal markets, going from, in the space of 4 months, $33.5 to nigh on 60, 58.5 is pretty extreme. It's a pretty extreme bullish move. Outside of the spills, you generally haven't gone up that fast in a long time. Maybe over here in a blow-off high. In the recent, when was that? 2011? When last did you go up that high? So I'm saying to you, you're going up at a momentum that's not being reported in the news, that you're not looking at in your charts, on one of the most inflationary elements that exists. Your Amazon purchases, by the way, they're still not being dropped off by drone. Yes, love and light, we'll all soon have that happen, but it all takes a while. Who's bringing your Amazon purchases? The guy in the diesel van that's working for FedEx, DHL, UPS, etc., your local delivery dude. Your local delivery dude working 3.5 jobs to earn the same amount of money as he used to do, serving you your pizza at night, your cappuccino in the morning, and doing some parcel drops on the weekend. That guy over there, who's not earning the income anymore, his wages don't seem to go nearly as far anymore. And this is why they talk about this great K-shaped economy. Let's do the super fat. I'm falling in love with that. K-shaped economy. Here's your plunge, ergo the CV19 crash over here. CV19, which wiped out and caused so much angst for so many of you. There she goes. And then who's going up? Well, the billionaires, Amazon, Netflix, etc. So our friend Bezos, all of them, elongated muskiness, he's going up. He's sitting on billions of Bitcoin, etc. And what's happening to the population? We did that YouTube 2017 on this channel. It's probably the most watched. A polarizing event is coming. We called it in 17 before we even knew about K-shaped recoveries. This is the great divide. Let me introduce you to the waterline. And let me say this much to you. 99% are going to end up below this waterline, enjoying the bottom half of the arse end of the K, drowning. You better have a snorkel, or else build your wealth during these times. And you have to be long. You have to be long commodities. You have to be long Bitcoin as well, super macro, yes, silver and gold and many other things. Okay, I detoured a little bit to tell you the state of the nation and the economy. Let's go and have a look at that Brent chart. Do we get a cleaner falling wedge? Can you just take from this chart before I leave that there is a clear point of break that is coming? And just in terms of this chart, one more time, before I leave it, let's have a look at how many times you've turned back from that capping descending grind line. How many times have you turned back? I'm saying not this time. So you can count them with me. Let's do it. So here we go. Let's get up to this chart. So once, that was in 2008, after so much printing and money creation, subprime boom and everything. Twice, 3 times. 4, 5 times, and I'm saying on the 6th time you'll come out a lady, transgendered, the whole caboodle. That's how many ops it takes to cut all the tackle off and be the proper full-blown Sandra Bullock. Okay, here you are, here where you are, and I'm saying we're breaking that line this time. And more than that, I'm saying to you, there's your 100. As part of this breakout, yes, you will have a return move, quite potentially. It may not be big. It could be big. But you will break that 100 level and it will come faster than you think. It will come faster than you think. I think it's quite possible this year still. It could even be this half year still. Not too sure about that. I wouldn't overstock it, but this is something that's going to catch everybody by surprise, and that will be the trade. What will be your gift? Look for a very small setup, setting up against that capping descending grind line. Let's go to Brent. Let's see if the story's any different. So this is a different oil, and we're going to go with that guy. So what you can see is it's far more moderated. You didn't have quite the same extremity of dip down here in terms of this particular chart. You didn't have the same degree. You've supported many times along this. This is a very well established wedge. And also in terms of our top outs, just about there. So you've had one, and then about five, and then another one over there. So you're on about 6, 7 top outs. The next one that you make, and I think Brent will be the key, will be the breakout. So actually Brent is a very significant one. I think it's consumed more. I think it's consumed more in terms of volume. I stand corrected. I think I read it, and I'm going a bit from memory, but I think that's correct. So watch for this. Look at Brent. Is it any different a story from here to there? Brent down at around 35.5, maybe going on 36, trading 61. 36, 61, 4 months. 36 to 41, 4 months, non-stop. When last did you do something so silly? Well, you had an absolute blow-off up top there. That was ridiculous. That was during the subprime crisis. They used oil to skim all the extra money everyone was getting. That was natural of them. They were still very much invested in the oil markets before moving most of that interest. You had another very bullish period there. This is not finished in 4 months and may still accelerate and needs to get up to that other line. So the 8th time you get there, you will probably do some form of fractal setup and then blast through this level. And then getting to 100 is even lower on Brent because it's got a slightly premium to it. Will be that line. So, commodities are strong. We're talking specifically about oil, but we're going to talk more about commodities. Watched yesterday Stanley Druckenmiller reassert how long he is now getting in commodities. It was interesting because I'd already decided to do this YouTube, and I had that put in front of me. And it was nice to have someone like that at your back, long the commodities. He's a bit uncertain about Bitcoin. Is it a bubble or isn't it? Etc., etc. I didn't get a comment on gold out of him that I could hear or listen, but we're going to take a little look at it as well. So what else? Let's just talk about natural energies, other energy alternatives. This is a global uranium ETF. Now, what many of you might not remember is that we had events of Fukushima, or you probably do, but you don't remember what year it was. And it was very, very dangerous, and, you know, nuclear power is all bad and all of that terrible, and Germany cancelled, you know, any further investment in nuclear. Well, actually, a lot of that was reactionary and stupid. In fact, nuclear is one of the cleanest. Yes, there's nuclear waste that comes out of that, but for the amount of power you get, it's still one of the cleanest. And in the meantime, getting the whole world solared up, let me tell you, has one big problem. It's called silver. In a commodity bull market, a very manipulated market according to many people. But what do you think is happening here? Well, to me, this is a big rounding bottom. Energy is going to get expensive. Let's draw it again. Try with the pen this time instead of just the mouse. Super low volatility points to eventual bottoming, and I would argue already this is happening. Above ground surpluses again being whittled away. A lot of decommissioned nuclear arms. Russia had a deal with Reagan when, as part of the decommissioning of arms, that their warhead uranium would be diluted down. It's the most enriched in warheads. Yellow cake. and would be diluted down so that it could be utilized in nuclear power. And it was an agreement to purchase all of that and distribute it to nuclear power stations. So there was lots of deals done during the collapse of the Soviet Union, Gorbachev, Reagan, and many of you are not familiar with that. You need to go back and retrospectively read that. But those tails were combined back into the super enriched to dilute it down into a level that was utilizable for nuclear power. Nuclear power is clean power and it serves a lot of people. It's very efficient. Yeah, that's right. Don't confuse it with nuclear warheads. The reason it's called nuclear because it's part of what uranium does. It goes into nuclear science and involves quite a high intense power creation, which does lead to obviously some pretty toxic waste. But it's clean. It's clean compared to coal. It's clean compared to many other aspects, and the wind and the others are not taking up the slack as yet. Remember, all this talk about green, the bulk of your power is still being generated by the old ways. The bulk of everybody's power is still being generated by the old ways, including a lot of coal-fired plants, which are the worst for soot and carbon in the air. Okay, let's have a quick check at the chat. I've got quite a lot more to show you, but let's have a quick check. Let's have a quick check of the chats. How about that? Try say that when you're dyslexic. Rusco, perfect mix. Just think, wars will be resumed now that Biden is in, says somebody. That, by the way, all that I just mentioned does not take into account any conflicts. We know who really wants to see Iran flattened, the Tigris and the Euphrates, very biblically significant rivers, Babylon, Iran, Iraq, etc. Prophecies, Greater Israel, you know all about it. I like hype. NIO has. We know what hype did to Tesla, says Coco Jumbo. Nuclear energy. I got a few thousand people's worth of silver. Keep gaining. Yeah, so someone's collecting your silver. You better get in there and get in that queue and collect your own. The Indian granddaddy of oil stocks is Reliance on the new NSE. So we'll take a look at a couple of oil stocks as part of this charting analysis. Platinum is coming, so says somebody, is mooning. That's just think. So is oil going up or down or just joined? You've just joined, watch it later. I can't recap all of that. So let's talk a little bit about a couple of other things that I've got over here. So uranium bottoming and heading up. Energy needs. It's required. Forget all that happened with Fukushima. People are going to requisition nuclear power plants. It's clean energy. It's coming. Yep. So gas. Well, there's not much to say on gas. Apart from very, very similar if you're talking about low sulfur gas oil futures. Notice anything that looks kind of similar. This is not just about oil. This is about energy for households, homes, and people for living. And guess what? It needs to go up. It needs to go up, and it currently is. So a low sulfur gas oil future, and this is on the ICE exchange, and this is in euros. That's doing a very, very similar structure. Energies are going to get more expensive. This is going to be true, not just tomorrow, next month, the month after. For this year, the following year, and the years thereafter. This is rolling, and this is part and parcel of inflation. Part and parcel of inflation and the requirement for energy. Good. So that's sulfur, low sulfur gas oil futures. Let's have a little look at something else I put aside before we get into the equities. What have I got? Royal Dutch. Let's just take a sidestep. If commodities are going up, what's actually happening? And just ignore my drawers there for a while. Let's just show you. Now, for those of you who don't understand the debt markets, it's kind of confusing. But actually, I've got a great podcast that just explains debt. This right here is the value of debt. And when the value of debt goes up, it means the interest rate and the yield is coming down. It's an inverse relationship. If you get a chart of the yields, yields have been dropping for 40 years since Paul Faulkner went after inflation. In the early 80s, the gold-silver spike, listen to that, correlation, debt markets, really low value, super high yield, gold, silver, super high spike. Stagflation it was there, low growth, stubborn and high inflation that was being lied about through its teeth, everybody's money. It was theft of the citizenry. It was post the Vietnam War of the late 60s into the early 70s and everything that trickled out of it. The dollar window, they closed it eventually. They confiscated and they prevented citizens from holding gold and silver. And as Lynn Alden highlights, throughout that period that you couldn't have your insurance policy is when you most needed it, because bonds were giving you a negative real return. In other words, what they were paying on the interest versus, yes, this is right, versus your inflation was negative real. You were giving them money, and at the end of the day, they were giving you back less of it. And you couldn't protect money by going into the normal places, which was gold and silver. So what's happened recently in the TLT, which is the 20-year Treasury Bond ETF. So this is an ETF based on increasing bond prices. Let's have a smaller look on a lower time frame. Now, many were looking at this a while ago and saying we should go up. Just use the mouse here a little bit. There we go. There we go. This should be going up. They were drawing this at the time. This was around August. Not every squeeze is continuation, as you saw today in the short time frame with a slightly exhausting Bitcoin chart. Not every squeeze is continuation, especially when you've gone close to all-time highs. And this one was obvious, had a super slap in the face. Real shock. That all came about during the COVID dramas. Was it COVID? Yes, it was. 2020, it was the COVID dramas. Suddenly, wow. Big problems in the repo market, massive capitulation, then quick re-inflationary pump up for the bond markets. What's actually happened since is debt is bleeding down. And I'm wondering if this was the all-time high, never to be seen again. What would that mean? What would that mean? Well, it would mean that interest rates, low interest rates, don't forget my Reset Sniper channel, get the goyim off the land, getting people out of their properties. Who has a mortgage on their properties, or a bond, as they say in South Africa? Who has debt? Guess what? I push that to 20 or 30%, your house becomes mine. You failed to make payments. Are you all cash owners of your cars, your bonds, your everything? If I want to flush you out, I just change the price of money real quick and say, hey, we had to do it. Inflation, stagflation. Could the big trap being set, being the I wouldn't say hyperinflation, certainly stagflation. By the way, Shadow Stats, worthy of a subscription. I'm subscribed to him. Got the inflation rate for this month, just ended at 9%, all of last year in and around 9 and just sub double digits. That is inflation as measured by the Ronald Reagan measure that no longer applies today. You see, if you keep changing the benchmark and you keep changing the mix of products, you really remove any basis of real comparative comparison, because now there's an price of an iPhone in the bag where previously there was a loaf of bread. Now there's still obviously foodstuffs, but there's a lot of tricks called shrinkflation with shrinking package sizes, etc., that retailers are encouraged to do. So the big lie is inflation. Inflation is tax on you. Inflation means tax on you. That's how they tax you without you even knowing it. It's a broad tax on everyone. You're the monkey on the grease pole. You're having a rest and you don't realize you're slipping down. Because you're having a rest and not earning any new money, you're about to go through the floor. And that's because that's how they cheat you. And they cheat everyone by doing that. They print more of it and you don't get a percentage. If I have a share in a company and I own 500 shares in a 1,000 share company and they print another 2,000 shares and they don't give me another 1,000, I'm no longer 50% of that company, am I? In other words, I've been diluted. You are being perennially diluted by sleight of hand and a central banking cartel that is creating money for mediocrity and wokeness. The meritocracy is gone. You no longer do things because it's best in class. You do it because it's equality of opportunity. That's what the world is now. This is Ayn Rand playing out right in front of you. So all the clues have been there. So my argument is this could actually accelerate. In fact, we have downside targets on it down through 130, and it could be a beacon signal high. In short, to everybody's shock and horror, totally unsuspected, the next move in interest rates might be forced to be up. And it might follow a very severe upward ratcheting sphere in interest rates to try stop the likes of your staking coin going through the moon that's paying you a yield on crypto. The likes of you stop buying silver because it keeps going up. Stop buying crude oil futures or ETFs, to stop you buying equities that keep climbing in a diminishing currency environment. That is the fact. So if you look at that, you will understand why we are bullish. So let's talk and pivot to the dollar index. Interesting to hear Druckenmaier saying he's heavily short the dollar. Who has to print for the world when you are the de facto currency of the world? The dollar. The dollar, the dollar, the dollar. No sign of milkshake theory coming about. Even this potential reversal looking very soft. Looking very soft. You will trade inverted head and shoulders all the way down into the hole in hell, potentially, on the dollar. And it's going to be one of the sacrificial lambs. It has to be, because the debt that the Turkish, the South African, and all the others have, if the dollar starts to get too strong, will lead to instant defaults and major deflationary flashpoints that will cause more bailouts and more dollars to be created. So while we have an emerging market, if we were to have an emerging market crisis because of a strengthening dollar, you would have a massive deflationary event, a spill in values followed up by a snapback spike, just like we've had in COVID and in everything else. But I think COVID has been, the CV19 event has been the final shakeout to the downside on crude for a rebound that's going to go equally strong to the upside. Markets are like that. Snapback. So do not trade dollar strength generally until the dollar shows for a sustained period that it's back. And if it were to do that, we go straight back into shorting the rand, shorting the lira, shorting everything else for the trouble they will be in with their hyper-indebted state. What might happen, though, is the interest rates go up. And at that point, the dollar will be forced to go up in value. And that will not only squeeze, that'll squeeze the emerging nations in two places. A, it's more expensive to pay back your debt because the dollar's gone up in your rands, lira, reals, rupees, etc. B, the interest rates have gone up because they all probably have some form of floating contract that has a variable interest rate. That means you can be very quickly in a huge amount of trouble. The interest rate goes up 2 or 3%, that more than doubles, triples the rate you have to pay, and the currency as a result goes up 30%. So you've got immensely these multipliers on top of multipliers, which will make instantly the interest payments on debt almost game over within a very short threat. That is part and parcel of this reset. This market, this global reset is set for interest rate hikes to crash other governments into failure, which will see those currencies fail. But we're not there yet. They're going to keep the dollar weak for now, and we wait for that moment. So that's a comment on the dollar index. That was a comment also on the TLT we looked at, debt, and we looked at the dollar index. Let's go back up to that monthly chart and say, do you see anything similar about the structure of, say, platinum? Now, I want to tell you about platinum. Platinum is the great unloved precious metal right now because palladium ate its dinner. Palladium ate its dinner and reduced its industrial demand and drove palladium through the absolute roof. Everyone switched to palladium. Diesel cars weren't being made in the same number. Everyone was switching. The petrol was going to be based on palladium, and they used the platinum based. They're both part of the platinum group of metals, by the way, but as substrata metals, platinum fell out of favor. So it only has largely its jewelry demand and greatly diminished industrial demand. What's just happened on platinum? Well, you see its COVID reaction. You could have had platinum at all-time lows in and around the $575 mark. Last seen, not even close really, but within $150 at the lows of the most morbid the economy's ever been in the 2008 Lehman Brothers crash. So we've got two really morbid events. One that's supposedly leading to deaths, one that made everyone feel dead, and we still hadn't gone within $150 of that low. And now what's happened? Now what's happened on your falling wedge? Can you see falling wedge structure setups across a number of utilizable commodities where there's an industrial requirement or use, such as oil for business and homes, and also platinum. So platinum has had a shrinking demand and it's still broken out to the upside. Did resist once or twice before eventually, wait for it, the last 4 months, it got the pump. The pump. Refer to Arnie on the pump and the accent. There's your last 4 months. Last 4 months is a breakout for platinum. It will have catch up to do potentially, but as long as industrial demand remains low, it might lag. So I'm not calling platinum along. I'm just showing you how similar is that chart over there to the oil charts that I've just shown you. What about, let's talk about closer to home instead of platinum. What about a heating oil, for example? You know, heating oil is slightly different. Do you get anything different? So this is heating oil. This is oil you burn to warm your home. It's not for driving cars. Once again, the heating oil future has got a very similar DNA. Again, I can draw it for you using the pen. In short, I love big moves where the entire complex is moving. It's kind of like everything's going up. It's kind of like crypto expanding in the bull run at the beginning. Alts are going up, Bitcoin's going up, everybody's going up. Even the shit is flying. It's just a wall of money chasing in there. In this sense, there are no shit markets. Heating oil is required and is legit. But in that sense, it is a groundswell move. There are other things at play. Again, I warn you of interest rates topping. How will you be affected by changes in interest rates? On your credit card, on your home loan, on your car finance. Make sure, whilst zero, you clear those decks because that's how they'll own you. And then they'll forgive your debt, providing you show up for your vaccine and your UBI and your social score and everything else that will come. Another falling wedge. Another falling wedge, which has completed 3 structures, which we usually look for. In short, the next time, maybe a small test before it goes through, some form of wind up, and then a break. Can be a deeper return move. Who knows? So that's heating oil. Okay, cool. Let's have a look at a few stinky stocks. But before I do that, let's take a look at your comments. Buy silver for real. Yes, we will look at the silver chart right here, right now. There's 400 of you. We really love that. And almost 45% of you have given us a like. We thank you immensely for that. As a no advert channel that gets deselected down the charts, we really appreciate that. Help us stay on the top. Make sure you don't have to listen to ads and can get legit independent opinion on what's happening in the markets by always hitting on the always button in the subscribe column. People are being deselected. Okay, so let's show you something different. Let's look at a few stocks. Oh, let's have a Gazprom. Yes, I've got LukeOil in here to have a look at. So the Russian interest is coming out there. If nuke power was real, it would be used everywhere. Aston Martin stock. Let's go for gold too. Yeah, gold. Yeah, a lot of gold is held in the very official dark state bullion vault. So it's quite easy for them to control when they hold a lot of it through governments and central banking cartels. Silver. Yep, we're going to be doing silver. Reliance on the NSE, subscribed for the cause. Yes, indeed. Good man. Reddit says thank you. Top man Reddit, share it through Reddit. We'd love the Reddit community, all part and parcel with us. No ad channel, no bullshit channel, no mainstream media horse. First Majestic, says somebody. Okay, so let's pick off some of these requests and have a little look. What about our good friend, the Exon, which is very much part and parcel of the old Standard Oil, the psychopathic monopolist Rockefeller cartel. How did it do? Well, you'll probably note that we were doing a lot of TA on it at the time and haven't done since. Beautiful grind line there. Massive spill. To $32, you could have had it, its all-time peak was in and around the 104. It's still, it lost 2/3, fair enough, but it still never had the same effect that crude had. Brent fell to 15, but crude literally fell to 0 and on, as I said, on futures to negative. So we'll, not very positive, but held on. A little bit of a dead cat bounce for now. I would trade the underlying commodity. Technically, it's more interesting. That violent sell-off is going to take a number of good years to rebuild that degree of fat profit line that they were previously accustomed to. So actually, the commodity is preferred to me. The commodity is preferred to me. Let's have a look at BP, British Petroleum. Let's try again. British Petroleum. There she comes. Also, big spiller, but not as chronic as it was for Exxon. One of the reasons I think is that Brent factor, probably a bit more of an emphasis. I'm guessing, I don't truly know, but this is not as extreme. But again, it isn't a buy yet. The underlying is better. The commodity itself is better. Let's have a look at ones like Marathon Oil. Seeing a falling wedge in there, a really, really big, what a spiller. That was an absolute thriller all the way from Manila. So absolutely, that one got a bit of bounce come back to do. Also marginally lower lows, so it's less of a dip. You can see the scale there, that low versus that low. So that's quite interesting. Marathon, if you like a spec from such a low base. I mean, you're having a sub $10 stock here, which by the way is traded 42. That doesn't mean it's going straight back to 42. Remember, if we go to $100, that'll be good. It's not the oil all-time high, but it will be an immense swing in profitability for those that are in it. Lots of interest in that Keystone pipeline that was cancelled, and Warren Buffett's benefiting from the railroads there. So gossip and talk. Oil still is a battleground. It still is a global tax on everybody's economic activity. Understand that. So let's have a look at our Russian friends. LukeOil. It's done great, but I expect this is in Rubble because it's on the Moscow exchange. So you've got to have your Rubble converter there, and it hasn't all been easy and sun and light for the ruble. So in some ways it's not as interesting, but this one could go very, very far if oil comes back. Bear in mind, currencies, who's going to do well if oil comes back? To a degree, Canada, to a significant degree, Norway, and also energy's coming back helps the ruble. Energy is coming back, helps the ruble. Remember that, guys. Remember that from your currency trading. This is the market sniper, 360-degree views. Other countries also with oil biases can also recover rather nicely in the event of oil recovering in price. So the ruble will be one to watch. I didn't put it in the list here. I can get it out if you want. Royal Dutch Shell, let's have a quick look. Also had a little bit of a spill. Hasn't got a huge amount of history there on that particular one because I think I took one particular equity. Let's have a look at another commodity. We'll take in silver because you're paying for it. So the silver has the monetary element. So if oil starts to get strong, looks a little peaky here, by the way. This is not the best monthly candle so far. Can I just highlight that the month is not over yet? The month is not over. So while I'm showing you the monthly candle, a bull market in essence started here. That was during the era you could actually be buying silver for $4 on the future. $4. You of course just missed hitting 50 up top there, and then this was the new low. This is the new low. And now it's time for Elon, solar, and EV powers electronic vehicles. Guess what? That's good. That was your last chance. A steep look this way before we pump the other way. Something to bear in mind with the COVID spill and the subsequent oil move to the upside. So bear this in mind, guys. Bear this in mind. So take you into the weekly. Let's do it. Let's do it. So whilst this was a bit of a roundabout spike and dump, there was a little bit of that Wall Street bets narrative going on there. There is clear buying here. I'm not sure you're going to see these levels again. Just like there was a block of buying there. And you also didn't see those levels again. So now the previous 23 to 23.5 range is now a 24 to a 25 range. What did you get structurally? I showed you this before. You got a inverted head and shoulder break with the neckline at the 26. Now the 26 is the new support because you spilt there, you ran 26 and you bounced. Falling wedge maybe, okay, squeezy, squeezy. But what you could do is end up, once you're a bit lower, moving up. Look, it's not a runaway freight train just yet, but anything that can jump like that with a gap like that is potentially skittish. And shows an immense suddenness for shooting to the upside. So in this market environment of increasing oil, devaluing currency, potential that you're going to have a debt bomb that needs to devalue and deflate, they're going to be late to push interest rates. They're not going to want to do it. They're going to delay. So the dollar is going to continue to weaken. There's going to have a more and more negative return on real interest rates. During that window, all commodities will properly push. By the time they start increasing rates, and at the slow rate that they're going to do it, because they're going to keep saying the recovery, we need to nurse the recovery, you're going to have a runaway commodities boom, and you're going to find that you're going to get taxed in inflation in your bread, butter, and everything else that has oil in it, packaging, delivery, all of it. So let's look at those comments while we're talking about silver. It's a good time to have thousands of ounces of the precious metals. Yes, Lanko Bear. Jaco Versteer. Need some of your weed, but not your common sense. So electricity is also fake and x-rays. That's an interesting comment. If silver is manipulated anyway, why would we think it won't be in the future? Because eventually people don't create something that's not cost effective. In the same way that we had a massive oversupply and under demand for oil, that we had a huge dip down, now we're getting a snapback. So markets have to find their balance. Otherwise, it's costing someone a lot of money. And miners, eventually, it's no longer worth to sell. They can just stack it and not sell it. And they could create a short squeeze just by doing that. But, you know, they've got to pay their workers. If you don't have many pure silver plays, the people are selling it as a byproduct, almost as waste that they're glad to get some money on when they're digging copper and gold out. They don't see it as waste. I'm not referring it to as waste. I think it's highly precious. But the point of the matter is they're making their money and their economic aspects, and it's just a little bonus for them. Eventually, though, they don't pull out enough, and that's when you start to get a move on the silver. Isn't there a substitute for silver? Not that I know of. The most conductive metal of the lot. The most conductive metal of the lot. So should we take a look at the ruble for you? And also, I was meaning to put in here the Norwegian Krona. We'll do forex.com there, and we'll also do USD NOK. So two FX aspects for you to consider. So typically the ruble not exactly actually bomb-proof, although ironically not highly indebted, very well positioned for the energy boom. So currently not getting much currency benefit, and this is actually fairly negative. It could imply a deeper dip. And we've been wanting to get long it again. That means short the ruble, be long the dollar. But if that energy keeps coming, we could end up with a far deeper dip here. A far deeper dip than was expected. So that's the ruble. But we know with sanctions and all the political games that it's been kept under pressure as a currency. As a currency. The NOK had a bit of a super spike in the beginning of the COVID events. Actually, it's doing really well now. The death of oil was fatal for Norway. You went from around 9.2 to 12.2. But it didn't stay there for long. It didn't stay there for long because the US started printing, and guess what? Actually down, 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 and more down expected for me. So this chart would be a potential short as energy resumes its place in the inflation basket and we get more and more fresh dollars minted. Last time I heard it was 24%. 24% of dollars in existence were created in 2020. 24%. That's some dilution. Let's have a look at the comments. Hey, Market Sniper, when are you going to start shilling cryptos? Still of value and potential DeFi will be big. I don't want to be a shill for anything particularly. Thank you. But there's lots of interesting things going on in DeFi for sure. And there's lots of interesting things going in the majors, Bitcoin and Ethereum, which I consider to be the place that you absolutely have to be. It sucks that the NOK is so strong against the dollar. It could get stronger still, by the way. This was all during the period that the expectation, I suspect, was that oil would be weakening. It was a weak oil period. So this is inverted to the oil price. If we go back to 100, this could go back to sixes. So whilst it's already come back a fair bit, there could be more to it. Tesla-based materials. Graphite, yes, that's high. Will change to silicon and silicon, nickel, copper, and manganese. Used still to continue. So these may also continue to become more expensive. Rare earth minerals, all those metals just mentioned are also high. Lithium as well for batteries, etc., etc. All valid metals to mention. So a good comment there by, I think it was Jacques. Welcome, Jacques. Nice to see you in the comments. Thoughts on the low volume on Ethereum's new high trend? Can we join your trading group without taking the course? Say we're comfortable traders already. You need to understand the lexicon and the manner in which we speak and all the terminology and phraseology so that you can discuss with others. Otherwise, it's a Tower of Babylon. So instead of herding cats, we have everybody understanding and the same principles laid down. So just because you're learning something new doesn't mean I think you're a beginner and a useless trader that needs to be brainwashed and schooled like you know nothing. Not at all. You have videos you can watch at your own rate and pace that introduces our lexicon, the key aspects, and all the details, and then does intermediate and advanced levels, which pulls it in, all of which are interesting, and you see it implemented each day. So we respect that you're a good trader already, or you're a decent trader, and that you just want to be better. And you can get all the trade ideas that go along with that which we're doing in there, but you need to understand our shorthand and what it means. Silver's absolutely trash. Silver will be replaced by gold if gold goes up in value. I don't know how silver will be replaced by gold. But anyway, that's somebody's opinion. Well, what's your thoughts on USO? USO, I thought we'd done that. I don't know if it's any different. Is that a stock that you were talking about? The oil fund. It's the only thing we have there under USO. I don't know what I'm looking at, to be frank. United States Oil Fund LP units. Post-revenue split. Well, that's obviously very, very low, but there seems like there's been some splits in that. I can't comment on it. I'd need to research. I'd rather not say something stupid. I don't know what I'm looking at, and I don't know what whether there's splits lacking there. But just generally, it looks like, you know, there's been staircases there, but I think there's been splits. So I don't know if this chart is adjusted for that. Reliance. So I'll take a stock or two. So we'll have a look at Reliance. Great to have 426 of you watching. Thank you for coming on board. So we're calling for a wholesale commodity strength. And we're saying oil will be part of it. If this is the Reliance you mean, Reliance Global Group Inc. Yeah, an out of nowhere spike there is very difficult to have predicted that for me. So technically that's a news driven event, I can only say, for which very little people seem to know much about. It's come out the blue. Don't know what they're doing. Not much I can say about that. It's a pump out of the blue. And I know nothing about the business, so I can't comment fundamentally. Sorry, Josh, that's all I've got. Any other comments? Wrong chart, he says. No wonder. It doesn't look right. You said the American one, Reliance. Let's try one more time to see if we can serve Josh correctly. Reliance. Reliance Steel and Aluminium or Reliance Global Group? Steel and Aluminium? I don't know which one he's talking about.
Reliance symbol NSE.
There isn't a Reliance symbol. NSE. Did he say NSE? Okay, India. All right, sorry, I was looking for American. The only one where there's a Reliance is Indian. So okay, you wanna look at the Indian market? That's fine. It's not a rush in and buy. It's had a big move, again off the COVID lows. It's had quite a firm sell-off, and it's kind of, again, we're talking a lot about falling wedges at the moment. So, I mean, it can go higher to a degree. It might reverse back down and might then at some point in the future have a nice little bump. It's clearly in a bull trend. So it's clearly in a bull trend, but many things are. Many things are. You want to get your timing right where you can have a tight stop and some leverage. When they take away stock trading, what will you have left? Physical silver. So regarding the stock trading, I think they'll reduce us. They like stealing from us. It's a great taxation. And the retail traders stump up a lot of money willingly. So that business is an attractive business. That's the only hope I have that will keep trading still being available, in fact. But they've been forced to be more, not give you so much leverage to not kill you in the Euroland zone, which means it becomes less profitable. So there's going to be more exits, more people exiting the business, and it's going to be less attractive. But Citadel wants that flow, the retail flow, I can guarantee you that. So spread bettors and market makers. So that will probably survive in some form. So you want gold? Gold I'll give you. So we looked at silver. Silver is doing okay. But gold has been underperforming. You can't really do gold without doing the futures. Let's just go futures there. Gold. Type the word gold. It likes that rather. Okay, so it's a slower version of silver for me. It's kind of looks like it's done with its sell-off. Let's just technically analyze this from you. By the way, down here was almost the final low. You had one low earlier. Let's just get that in the chart as well. think you did 1,000. There you go, 1,080. That's it. So 1,080 was that low. And then we had our bull call here. So let's take it from the bull call on the falling wedge. That was bias bull. That has materialized. There was also HVF in there. Up move. Continuation. Wedge. Low vol. Up move. Then the whole drama. And then all the way up to new high. And then what's happened is you had a kind of flagging channel like that. And then you've square bottomed it. That's what we call a base plating low, which isn't bullish yet. It's the beginning of establishing a floor. And the floor seems to be the 1760 to 1800, the 1750 to 1800 zone, and it keeps bouncing off that. Any sellers that want to get out, get out. And you've snapped out of that channel downside. But you haven't snapped out of it and ripped. So it's requiring more time to base out. But base out it will, the macro trend is up. Base out it will, and the macro trend is up. So be patient. You might get a W. In other words, this is a key level at 1960. You can see over here a couple of times. I'm assuming we might get there again. That's a big ask, but you seem to have that kind of structure. So the price is being illustrated. 1950 is a short-term, medium-term resistance, and there's clear-cut support at 1800 and 1760. People will accumulate all day long here. So you're in this range. You need to wind up, get some spirit, and start moving up. So that's gold. And generally when you do gold, you should have a look also at the gold-silver ratio, which, as I've been suggesting, is continuing to head down, which is meant to be broadly bullish and indicative of gold-silver ratio. Come on. So generally this is meant to be indicative of bull run. We called the bull run when you had the super sell-off on silver where you could have bought it for $11 at the COVID lows. We said over here, broadening from 113, a reversal of this key ratio is a clear-cut sign to buy gold. Gold was still low 1000s at that point. And silver was just recovering from the 11 COVID lows. Now, of course, trading roundabout, where's it? $27 now. So still good, but plenty more to do. This was extreme in the pullback. So it slowed down a bit here. But we're grinding lower. We're grinding lower. Silver is the better trade. And by the way, to give that whole story perspective, this one doesn't have great history. Neither does that, which is another reason why I actually divide them out, gold by silver. But just at the 2011 low, you got to the 30s, and that's a halfway mark. That was a half leg bull market up to 2011. It wasn't allowed to play out a printing cycle. It's a half leg bull market. It's not even a half, it's the first leg for which you had a pullback now for the better part of 7 or 8 years. That's right, a bear market pullback, which is actually just a correction in a much bigger bull market. And the second leg is always generally, in technical analysis, broadly on balance of probability significantly larger by scale, often a Fibonacci level of 61.8 larger. So let's have some comments. Any opinion on Phillips 66? Check out Ride, just popped out of a wedge. When there's an IPO for a stock or an ICO for a crypto, how do you approach the first few days? So generally on cryptos, there's a ridiculous pump. Insiders get out. but they first make sure that they use a bit of money to give it a really great send-off. So the worst thing to do is, if you didn't get pre-IPO, is to buy on an IPO day. 95% of all crypto listings have a huge red spill chart all the way down to a base low, as all the pre-IPO non-committal money, even those that are supposed to have lockups and all the other defense mechanisms, they all just bottom, because you've got a ledge of sellers that all think they've got baked in profits that they just have to realize, and the greed takes over. So just about all ICOs, if you don't get pre-IPO, sell it on the open, be early, because you'll be able to buy it back anyway once all the other people that think like that have done it. And the more people think like that, the more the pre-IPO guys will sell it, and the more assured this cycle is. So that's on crypto coins. IPOs, even with Facebook and a few others, they went really aggressively chasing the high there. When they listed, I remember that it was a disastrous IPO, the Facebook IPO. It was greed personified. They wanted to go straight in at I think it was 100 billion market cap. Of course, now they're significantly higher, but that was some time ago. That's be careful. Generally better to be in pre and to unload into the IPO than to be buying on the IPO. The first day, the broker takes responsibility for what kind of experience you have. They actually ask for a fund to finish it on an up, so that the headline is listed day closed up, and then you're on your own on day 2, and then the arse falls out of it. So careful on buying on ICO and IPO days. Just a generalist comment. It's not uniquely relevant in every case. I think Nvidia will go higher. Mohammed, what else have we got for you? Yeah, Facebook went down 61%. It was an atrocious greed fest. But I mean, they started monetizing, and they just people started to appreciate the amount of data they're harvesting. You talk to the secrecy guys, your worst place is Facebook. They get all your contact, all your names, everyone who's friends with you. They get an entire network. Even if you leave Facebook and you disconnect, if you have that same list of contacts in your phone, you literally, to privatize yourself after going on Facebook, you would need to not have any contacts in your phone, have a Linux-based operating system, and never to use that thing again. And even still, if your girlfriend's still on there or your best pal is still on there, and you ever send them a text, they can triangulate very quickly who you are through your network. Once they've got your network, even privacy for you as an individual becomes really hard. The biggest and most dangerous privacy thief is Facebook. The most effective place for scraping everything off you is Facebook. It is worse than Google, it's worse than Amazon, it's worse than all of them. Although they're all coming after your data, it's just comparing who's the bigger wolf, or actually, like wolves, who's the biggest hyena out of the lot. But it definitely Facebook. De-Google, definitely, de-Facebook, anything. So yeah, I don't want to get into semiconductors. It's mainly about energy. This is your call. You'll come back to this YouTube in a year's time, and you will look at this and you'll say, yup, that was a high certainty call. Oil will go higher. It's obviously got momentum. It's got the last 4 months, so it's not controversial from that point. But to call for 3 digits when you're at 60, remember we called for single digits. We've just got into 60 on Brent. On crude, we're still 58. We're telling you in the 50s going up through 100. We're telling you that's what our view is. High probability in our opinion. High probability means more likely to happen than not. Good. Thank you, guys. DeFi moving. Grab the crypto stuff. I did just say on Bitcoin, the key things that's for the short time frame trade, we've passed major targets. So we're in that buffer trying to scrape a bit more near the end. So it does look a little bit tired. And that was a very short time frame potential gain. So it's one of those that actually looks a little bit weak. I'll just put the chart up for a second, only because it's also a money alternative, but we have a Crypto Sniper channel that we will you should be subscribed to if you're interested in the cryptos. We'll just take stamp super quickly for this list and close it and have a quick look. 44,686. Let's have a little look on the shorter time frame. You can see a rounding, a bit of a rounding. It spilled a little bit lower. It would have made, I suspect, our inverted target in the end. Once it's wrong and it's not going up, it's usually wrong to the point of being right the way wrong to the other side. So let me just check that for you. I in fact did a draw on one of them. Got to check I'm in the right. So here's a slight risk as well. It's been slightly mitigated, but you have a, let's get the pen again. So just super quick, we'll cover more of this on Crypto Sniper. See that wedge? When you broke here, that's when we knew, okay, that's not going to happen. It came back down to here, but when it was breaking on total, it's probably not going to happen. Little bit of a concern that you might get a rally and a head and shoulder there. That rising wedge was a concern. That break was a concern on total. It has dipped through though and gone quite a bit lower to the 130 billion. So once we ran this point and we said leverage off because you're going to start getting a top, as usual, it overran a little more than expected. Don't forget our last target was 25.7 and it did a 42, but then it had a 25.6% correction. So we're saying, oh, it continued to go up because we said we woke up here, close, and then we watched it grind higher in this rising wedge. So there's an inherent bull bias and there's a massive wall of retail money as well as institutional that just doesn't trade to a level and just chases in. So that actually sustained that rising wedge. You can see those buyers coming in there, buyers coming, first dip back, but then a slightly flatter buyers coming in along the red line there, buyers coming in, and then we let go here on that slight small time frame. So this is on the total. And instead of going up, it showed, okay, it's a spiller. So you get one wrong and you say, okay, no more power now. It's not that super bull. It's not that super bull. Happy with once we got above the 1,228 and we called for the 1250 to end, that was a pretty decent call. And you actually ran the 130 and you even went to 1.4 trillion. So you went 150 billion in total market cap overshoot to the upside. Pretty high. But note the marginally higher high and the marginally higher high. That's also a warning, and that was that wedge. So that's the total market cap. And then Bitcoin is not too different. It's a large part of that. It's 64%. And that was the short time frame, friend. Now I did an inverted draw. I don't know what happened to it, but I suspect that target is now made to the downside. So it's been a pretty aggressive sell-off. It had a bit of a bid spike when it ran that low, and then it rolled over again. Now it's getting another bid. I would, again, I'm reverting back to the previous view. Once you'd run the total target there, leverage longs, be cautious on leverage longs. When we saw it was still showing strength, we thought, okay, is there a small one more that can get out the door? Because it kept going up. We had a great evening on UDA overnight. Last night, we thought, okay, maybe there's a tiny squirt more. And actually that one had, it made sense that it could have an exhaustion just prior to the 50K. But no, that's it. It's now shown us. That's a feedback event. When you think you might get away with one more to the upside and it swings down, it's a feedback event, and that's telling you, okay, you need to start thinking about how tired we are. And we already knew that from the target. Okay, we'll do more of that on crypto though. The big talk is oil and commodities, physical silver. I also use Bullion Vault. The links are below. And you can have delivered. You can have name vaulted bars. Otherwise, the rest are in a pool, but they will be one-to-one backed. But you've got to hold some as well. That's my take. I use Silver to Go as a crowd, and Coin Invests for gold. You can check them out. No VAT. No VAT on the silver. Quite important in Euro land where there's a lot of VAT. Guys, you should stream on Insta Live as well. Yeah, Instagram. We need someone to show us how to do Instagram. We're not too smart. Thanks for the live session, says Josh. Okay, good. There's 403. I say goodbye. Watch out for that. We'll refer back to the oil bull market, the silver commodities, the call of topping on potentially debt instruments going down in value. It's about time. There's too much of it. It's not worth anything. They're going to devalue it. They're going to cheat. They're going to do what they always do. Print, and deflate the debt away to insignificance while paying you a ridiculously low rental on it. And why should you hold it? It's time for anyone who's a fund manager to be dumping debt for gold, silver, oil, commodities. And that's why emerging markets are running right now, guys. Emerging markets are running because the dollar is being kept low. They can afford their debt. The interest rates are kept low and everybody needs commodities. That's it. I hope you understand where we're at. I salute you and I say goodbye. Thanks for watching. Shares greatly appreciated. Links below. That was the last word.